Do you find yourself knowing what the trend is, but you still can't figure out just when to enter a trend and when to time your entries properly so that there's little to no drawdown and you can hit these high risk reward trades like how I do? Well, stick to the end of this video because I'm gonna go over the trade setups and strategy I utilize to cash these bottoms for a bullish market. Oh, this is actually during ADA session, so you guys may be surprised, like, why ADA session? Why are we getting expansion during the ADA session? Well, it just all depends on market conditions and recognizing them, right? You're not going to be able to always recognize it as soon as possible, but when you have a clear draw on liquidity, such as this session here, it's very, very easy to trade with the trend. So let's go over here. Let's go in replay mode here real quick to show you guys what I was looking at here. So if we go all the way back here, all right, all the way back here, again, it's two winners and one winner, or two losers and one winner, and guess what? I was still able to be up to risk reward. And this is how I was seeing the market at this time. So let me move this text to the side. That's going to be for another trade recap. This is very straightforward. I tell you guys this all the time. Just keep in mind what structure is showing, right? Just because we break below this low that made a new high does not mean the market is now going to go bearish like this. This is completely wrong. This is why so many retail traders fail. Instead, this is a liquidity sweep, aka also marked by my ETU elite indicator, as you can see, which if you want, you can click the link down below to access. And it marks out my structure automatically for me here as a liquidity sweep. But you don't even need the indicator, to be honest, to mark that though, because my students all know this is considered a liquidity sweep ahead of time. So once we sweep this low, what do we see next? We're anticipating price to go higher. So I am keeping a bullish bias once we sweep this low, and you see some structure forming, aka either a external change in character, things of that nature. So for example, something like maybe this high getting taken, or just create a new structure where we take out this high here, right? That's intermediate high that just got made. It did not make a new low, but it's an intermediate break structure here. AKA, in this case, this is external since we're trading on the 1 minute time frame here. So once we broke that and we swept liquidity, there's nowhere else, there's no reason for us to go lower to take more liquidity or come all the way back down here, right? Because the market's bullish. And when the market wants to trend, it will trend. So now let's go to what I was looking at here at the time. And remember, when you're marking out structure and your ranges, the first thing you always want to do, guys, mark out your inducement. I always tell you guys to do this all the time. Look for your inducement first. Because if you can't find inducement, you're going to become inducement. And if you can't find inducement, you're going to wait for a trade that will never go back to 50% of the range. For example, some people are probably marking the range from this high to this low to that high. And you're never, ever going to be able to catch a move like this. You trail inducement. So once I see this new inducement being made, also this is a gap up, right? And you guys know when we have gap up, sometimes we tend to do a gap and go, right? Once we take out this high, we can see we're still stalling up here and creating new value here with this inducement. So this is my new structure here. And the low, well, you look for a PY right below inducement, which is what I teach you guys. You either mark this low here or you mark this low here. Both are completely okay with me here in this case. You can mark this one, that's more prevalent, or just mark the low of the PY right below inducement. Usually we take out inducement. So if we do inducement here, we take out inducement, tap into PY, immediately go up. We usually don't like take out inducement, tap into PY, and keep stalling, keep going down, unless we're looking for a liquidity sweep of some sort. Then sure, that could be a possibility. So let's keep playing this out. So I was waiting here. Again, I'm not entering here. All right, I'm waiting for this inducement to get taken. So let's wait a bit more, and boom. Now you can even, in fact, here, take advantage of my stop hunter setup right here and take this short, but I did miss this trade here. But this could have been a very valid trade, and again, you either cover the PY or you don't. As long as you can get a good, almost 3x reward, that's basically my ideal RR for my back testing for stop hunter. Why do we take this? This internal high made this new internal low, candle to candle structure. And once you take out that internal high, this is where people think they're buying. People are buying above this break here. We're actually selling this. But again, this is a trade that I did not personally take. So anyway, that would have been a nice setup here. Since someone did actually request, one of the students requested me to show some other setups that I personally didn't take that you could have taken, that even though I missed the setup, right? Valid setups, invalid setups. So that's just a quick example of a valid setup. Now let's get back to the charts here. So now we tap into a PY that's unmitigated, right? We have gap here, and this is unmitigated right here. And I'm looking for confirmation. And in this case, as you can see, we got confirmation here. All right, we have the OB entry model here. And I was on a chart at this time, I believe, so I missed this setup here, or this entry model here initially. And boom. Just all you do is you just have limit order here. Again, you can even cover just the OB if you want. You could have got almost 11 risk reward, but I personally got around 4 risk reward off this trade, 4.6. So again, basically 0 drawdown. As you can see, a lot of my trades you'll find not much drawdown in them because my axes or my entry model is very precise. And where's my target? Well, this is inducement, all right, for this PY here. However, I'm anticipating this PY to fail because, again, higher time frame context here. We sub liquidity, we're bullish, and we should be taking out highs. Like, yes, there's supply here. We got to be more careful the higher we go up in the leg. However, keep in mind that this supply is less likely to hold than this supply, for example, because this is the more extreme supply. This might cause some sort of move, but again, ultimately, I'm trying to trade with the trend. So ideally, I don't take too many shorts here. I try to just focus on following the trend or waiting for liquidity to get taken out. And so here is a trade, and boom, 4.6 risk reward here. As simple as that. Don't overcomplicate the system. This is, again, during the AJ session. So there's the trade. And ultimately, you could have taken a reversal short, but remember, if you want to wait for a manipulation above this break structure, then you take it. There's your short entry. So for someone that's looking for like a B plus setup, this would be your setup here, waiting for this high to get taken, waiting for this internal high to get ran because it's all liquidity, and then taking this IFG entry using my entry model, using my indicator, and your target would just be either this liquidity here, so you target any of these lows here as inducement, or target the PY right below right here to the tick right there. So it's up to you how you really want to target on this trade. And if we go to the 5-minute time frame, we might see something different. Okay, you want to be exchanging and alternating time frames. So here will be your inducement, for example, and this is where you could target. Like I said previously, any of these lows are completely okay. You just want to switch time frames and see if you see anything valid. In this case, it did miss the 30-minute demand. So if you did not take this trade off sweeping inducement and you took it off a PY mitigation, you just would have missed the long here anyway. And at this point, I mean, your short here should be break even if you're targeting further, something like that. Maybe these lows. But personally, for counter trend trades, I'm not really looking for lows to get ran. So anyway, let's keep playing price out. We have a break structure here, as you can see. And then there it is. I think these things moved around, which is kind of weird. This is the first entry I took, I believe, off this PY here. All right, and it failed. This is the OB entry model, as you can see. And then this is another entry I took. And unfortunately, both of them failed. You can see here, you actually had a chance to break even on this setup here. So where would you have break even is a real question. Well, you would have actually broke even here, because this is your internal break structure. And you can see this trade actually ran a good 3 to 4 risk reward at the origin there. And my target was actually, this was, oh, I remember, this was my lotto trade that I called out to Discord. This was a lottery trade, meaning these are trades that I'm anticipating to cash the exact stream low in a swing overnight. So this was a trade I was swinging overnight. I remember now. This trade was not. So this trade was here because all this is liquidity, internal liquidity here. I was like, okay, this is a pretty solid place to enter long. And again, depending on how you manage this, break even, 3 to 4 risk reward, or take the -1 like me. I usually set and forget for most of my swing trades overnight, unless price is already like more than 50%. In this case, it's not towards my draw on liquidity. So no break even, 2 losses back to back, which is okay with me because like I said, there's a 4R banger right before this, which is double my losses. Actually, this one winner I meant is 4 times one of these losses. And what do you see happen again? Remember guys, when I said on the higher time frame, if we're bullish and we sweep below, it's not a real change in character. It's a liquidity sweep, guys. It's a liquidity sweep. And so when you go back here, draw your structure. If you cannot visually see structure based on candles, draw it out. I don't draw this structure here. The reason why? Well, because this structure did not do anything prevalent here. It did not make this new high. So what happened here? Basically, this was the last high, the new high that got made. This is the last low that made a new high. Remember, you see how this low did not make a new high here? So you don't have to draw that low there. And this is just a liquidity sweep. So you sweep this low. And you can see as soon as you sweep this low, there's your entry model. So you could have taken this if you want to. But again, I wasn't awake at this time. I shut down the charts. This was a set and forget trade overnight. So for those that did take advantage of my session's liquidity strategy along with structure, you could have caught this insane banger here. Again, depends on how you want to enter. Depending if you want to set a limit order at the liquidity sweep. I personally I don't recommend setting limit orders at liquidity sweeps because you just never know how far liquidity sweeps can go. I will say I have done back testing back in the day on setting limit orders at liquidity sweeps, and they can definitely work very well. But you gotta know where your draw is, because if you don't know where your draw on liquidity is, it's gonna be bad. All right. And again, for example, if you set like your oil limit order here, you don't know how far this can go, right? And so if you set your limit order and your stop loss right there, you're just gonna get immediately taken out without any type of confirmation, because price, even on the seconds here, is not gonna show you anything. If you go on the seconds real quick, you won't see anything on the seconds. All right. So this is just an impulse delivery here. So if you want to take the impulse model, you can. I wouldn't say this is not an A plus impulse model. All right, this is more so like a B to me, because only the recent delivery leg here was impulsive, the recent internal structure, not the entire leg. Ideally, you want this leg to be smaller, lesser candles, not this many candles, and it should be almost all the same color or a lot of imbalances. This doesn't fit my criteria for an A plus impulse, but this would have been where you take basically a normal setup. So if you take the IFG here, there's your entry. I think I have to refresh the indicator here real quick. Let's see. Okay, should work now. Yeah. 80 session low, sweep, this low getting taken out, both lows getting taken out, and boom. You then to hold this trade towards my initial draw on liquidity, which was 13 risk reward. So I didn't mind taking this risk here. And for those that just kept my same draw on liquidity that I sent out to the group earlier, just re-entry, you would have caught a very nice 7 risk reward depending on where your stop loss is. All right, so this is just an example of, you're not always going to time the market bottom exact every single time. Timing of your entries do matter though in the market. It's not just about direction. You also want to know when you want to time your entries. Like for example, timing this after inducement gets taken out, or timing this after liquidity sweep gets taken out. Like this would have been a setup I would 100% take anytime, any day, if I wasn't asleep during this time in this trade. Anyway, hope you guys do enjoy today's little recap. I'm going to do a recap, of course, of what you see on the right screen side here of the other trades. But if you guys did enjoy, make sure to leave a like, comment, subscribe. Click the link down below if you want to sign up for the ETU 100 Risk Reward course. The mentorship is officially closed, so I'm not accepting any more students for the one-on-one private program. But if you just want to learn at your own pace, link is down below. Peace.